Welcome back to another episode of Sunday School with your boy Buck Bandit P here on the Financial Corner, where we break down investing for average everyday people so we can go out here and get this money. You heard me? But before we get started, click the like button, subscribe to the channel, hit the notification bell so you can get notified every time we post a video. Also, click the link right there in the description, second link, and you can get your free stock from Robinhood when you open up your account, man. Also, you can get your $100 when you open up a high yield savings account with Allah. That's down there too. And lastly, for the first link in there, get your financial freedom journal. And also check out the other merch, man, at the Buck Bandit shop in the Financial Corner collection, man. This is about progress around here, man. No shortcuts, no excuses, just progress. Without further ado, let's get right into the episode. Last week, episode 19, we went over, is the stock market too expensive? Is the market too high to invest? Is it too late to start? Did I miss the boat? Did it all going? I missed the train. I'm at the train station waiting. Should I just wait for the next train? We already went over that. So if you don't know the answer to that question, make sure you go watch the other video. Then come back to episode 20 and tap in. Because we're going to get a little more in depth with that. Is the market too expensive? Is these companies too high? And all of that stuff. Because what that tells me is you don't really understand the market. Let's get right into it. Last week, we talked about the high grocery store. Remember how I compared the stock market to a grocery market? And I said, even if the grocery market got high eggs and high milk and the bread high, we still buying it. We might complain, right? We still buying it. Why? Because we got to eat. Stock market the same way. We got to eat. So we still got to find value even when the market is high. If things look too expensive, what do we say most of the time? Well, I'm just gonna wait for a sale, right? Oh, they tripping with that. No, I'm gonna wait till that joint go down. That's what we always say. I'm with you. Sure, listen, dog, I could wait a couple weeks for that. The whole thing is, the secret to the stock market is, like if a company has $500 stock, like a stock for one share of a company is $500, right? That's expensive. It seems expensive, right? But another company that has $5 shares, their share is only $5 for the stock, they could actually be more expensive. Let me explain why. Because it's something called a PE ratio. PE ratio. That's how you break down if the stock is cheap or expensive. Let's get right into it. The big question is, how do we know if a stock is cheap or expensive? Because the PE ratio. Think of it as when you're in the grocery store, it's like price per ounce or like price per pound or something. Let's go, I'm gonna give y'all an example of buying bulk versus buying a single pack. All right, because we still gonna keep it in the grocery store to break it down so everybody can understand it. So you know how when you go to BJ's and you could buy the bulk paper towels, they give you like 24 rolls and it's like $40 or something? Most people be like, all right, well, a single roll is only like $5. So why would I pay $35 more and I would spend more money? What they're not realizing is you spending more money, but you getting more bang for your buck. A 24 pack of paper towels, say, is like $30, right? A single roll would be like $5. What we thinking is, oh, I'm gonna spend the $5, it's a better deal, right? But what you're not realizing is you're not looking at the price per sheet, like I was just talking about. Price per pound, price per ounce. So we're going to talk about price per sheet since we talk about paper towels. But you're not looking at the price per sheet. So the $30 pack, you're spending more money, but you're actually getting more for your money. You're getting more bang for your buck. And remember what I said in a video a long time ago? Listen, I look at the different, when we was talking about index funds and I was telling y'all, you got to pay attention to them fees because you want to go where you're getting more bang for your buck. Even though these two index funds might be invested in the same thing, one fee might be higher than the other fee. So you want to go where the fee is lower because you're getting more bang for your buck. That's the name of the game. The breakdown, what you pay versus what you actually get. What you paying is the money, the $30 versus the $5. But what you're actually getting is the paper towels. You're getting way more paper towels for $30 than just $5. The PE ratio tells you exactly how much how much you're paying for every dollar of profit that the company makes. I'm gonna say that again. The PE ratio tells you exactly how much you're paying for every dollar the company makes. So for simple math, let's break this down. Let's go to the formula. The formula, PE ratio equals the stock price divided by the earnings per share. All right, and you can look this up. Stock price, earnings per share, PE ratio. Honestly, you could really just look up any company and just look up the PE ratio. That's the cheat code, but if you really want to know the formula, stock price divided by earnings per share. Example, stock A costs $100, stock B costs $20, all right? But stock A, the PE ratio is higher than stock B. So for stock A, you paying $10 for every dollar of profit that the company makes. But stock B, you're paying $20 for every dollar of profit that the company makes. Understand? So even though that stock is $100, now once you realize what you're getting with that $100, you realize, hold up, this stock is actually cheaper than the $10 stock. Now, let's understand, let me break down high PE ratios and why they are not always bad. Somebody might see a company like Robinhood and see, well, let's not use Robinhood. That's a bad example. Somebody might see a company like Amazon or something and they see their PE ratio at like 20 or 30. That's not necessarily bad. Just because a PE ratio is high, that's not necessarily bad. If a PE ratio is higher, that's usually with tech-related companies. And the reason why their PE ratio is higher is because investors think that they are going to make money real fast in the future. That's all that means. So you paying $30 for every dollar that the company make because investors are anticipating that the stock is going to rise really fast. So you're going to make a quick buck. Don't just look at the PE ratio as a blank canvas like, oh, if it's over this, I'm not investing in that company. That's not a good barometer is if it's a good company or not. If you want to know, look at its competitors. See the PE ratio of a company in this particular sector, and then look at its competitors in that same sector, and then compare the PE ratios. Bada bing, bada boom. It's not rocket science. Now let's break down why. Because you gotta understand, like the grocery market analogy, you're gonna pay more for organic. Why? Because organic has better benefits, supposedly, and it lasts longer, and so you're gonna pay a premium just for a better product. However, you don't want to get caught up with the fancy packaging, which is trends and meme stocks and all that. Don't get caught up with the fancy packaging and then get caught holding the bag and you paying a super premium because you think it's going to rise real fast, but it don't. It really ain't organic. You just paid all that money for some regular milk. You always want to look at the whole picture. Make sure you pay attention to them earnings report. Make sure y'all pay attention to that net income. Make sure you pay attention to their debt. And then that's going to tell you the whole story of basically what the company is doing. And then pay attention around you. Like, dang, there's people watching Netflix? And it's going to tell you where the company is going. You don't really got to be a rocket scientist to work. Is Apple going to not be here in 20 years? Is you not going to have an iPhone in 20 years? You can answer these questions simply. The action step. Next time you look at a stock, don't just look at the price. We're going to look up the name of the stock, and then we're going to look up what? The PE ratio. And then we're going to compare it to the others in the same industry. I want y'all to get smarter with investing because it's really not hard, but if you just following what other people do, you're not going to understand the inner workings of why they doing what they doing, why they saying what they say. Because there's some people giving good information out here. I don't want to knock that. But I want people to understand so the game become easier. So then you ain't got to get on here and look at my ugly face and man, I don't feel like talking to you. I'm going to go, you know what I mean, go fish myself. And that's all. And then you can teach your family and your youngins and everybody how to do it because you understand the game. And once you understand it, when stuff going up and down and fluctuating, you ain't going to be emotional. You can be like, ooh, okay, ooh, that's cheap. Oh, that's too much. Oh, that's oversold. That's overbought because you're going to understand the game. If you here, you already in the 1%. You like in the 10% because nobody even want to hear this type shit. That's how you look for stocks. You don't just look at price. You look at the PE ratio. You compare it to others in the industry. So if this helped you, I only ask one thing. You already know what I ask, man. Share it with somebody so it can help them too. And it's about building the community. We can help each other and build off each other. And also remember, building freedom only take $25 at a time. Don't forget that. Don't let that go over your head. Building freedom can start with as little as $25 at a time. Drop a money face in the comments if you rocking with it. And make sure you come back here next week for another Sunday school. We ain't stopping no time soon. Make sure y'all come back for Financial Fridays too, because that's on fire where we get a stock market update every week. And before we get out of here, make sure you grab your Financial Freedom Journal so you can keep and write down all that money you make and keep your books in order. Yeah? And with that, y'all have a good day. Have a good night wherever you at. And let's go out here and get this money.